Good morning, everybody. Thank you for joining. This is Dee Dee with Power 3 Trading. I'm not here just to teach you the strat, but teach you how to execute and profit from the strat using the strat techniques, profit from the market using the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith, that's Smith's in the Black channel, Rob in the Black on Twitter, and at sepiagroup.com. So I know it's been a while. If you had watched my Benzinga video, I talked about gap reversals, how I use the average daily range and broadening formations. Rob would tell you that one could make a really good living just trading gap reversals off the 30-60. And so what I'm going to talk about today is, this is for those who would prefer not to trade the open or want to have busy schedules and want to trade later in the day. We're not going to draw broadening formations. And so we're going to use the gap reversal strategy using the 60-minute time frame and average daily range. Now, average daily range is just a mathematical calculation, typically based on the higher highs and lower lows on an average certain number of days. So I have a script here that I'm using that actually is on my blog as well. And I use TradingView. And so this is a script that I use. He has an ADR high 10, low 10. I think that's 10, average of 10 days. I use the 5. And of course, I don't use the plots in the background. He has potential plots where I think the market could go. They're dark, so you can't see them on my screen, but I don't use those. All right, so all I'm looking for is to trade reversals off the highs and the lows of the average daily range. To do that, though, we want to use the longer time frame. We want to use a 60-minute time frame or the 90-minute time frame. And the reason for that is you want price to trade up to that average daily range and reverse, or down to that average daily range and reverse to the upside. If price breaks the high or low of those ADRs, then there's potential for price to continue in that direction. But of course, we want to be careful because price can trade up and down around that average daily range because it's hitting some level of support or resistance, if you will. And what's important to know is when a market is gapping, it may be gapping close to its average for that day, hence the name average daily range. And so when that happens, you want to be careful not to trade two continuation patterns, because the market typically gets choppy after that gap, especially if it's pretty close to its ADR. And so the best way to trade that is to wait for a 60-minute flip, okay? So what we're going to talk about today is what happened in the market yesterday. We're going to look at the Qs, Tesla, Microsoft, NVIDIA, and Apple. And of course, Apple had some news about, slowing down its hiring. I mean, listen, guys, we're in a pickle, right? Maybe recession, maybe not recession, maybe stagflation, maybe not stagflation, which could be a big challenge, especially if unemployment is really low. And so what generally will happen, the Fed is going to do everything they can to raise rates to curb the appetite of spending to drive these prices down. But with unemployment as low as it is, typically the only way employers can stave off some of that labor costs is to stop hiring, right? Because unemployment is low. So what they'll typically do, and I think this is the announcement that you're starting to see, is they're gonna, like, if there's normal attrition, so somebody decides to leave the company, they won't rehire those people back right away, right? So they'll just leave that job rec open. Or if they have open recs, then they'll just not fulfill them right now, right? So that's the message that I think we're hearing from corporations now is, hey, we're going to slow down hiring. We're just not going to fill these jobs because they're waiting to see the impact of these the Fed moves. So as a result of that, Apple sold off as well, and so you're starting to see that across the board. Some companies are laying off and others are just saying, hey, we're not hiring. We're going to hold off on those open positions. So we'll see what happens. All right. So yesterday, here's the broader market. So we're going to look at the cues first. This was a gapper to the upside. And so the average daily range doesn't form until after the market opens. So that's why this strategy works best after the first 60, because you can see what price is looking to do after that first 60 minutes. So price gapped up. Here's our average daily range on the 6 minutes. So my time frames here, 660, I like 6 minutes. So 660, 2 hour, because that helps me gauge my 4-hour flip, and then the daily. All right. And so what we're looking at is just every 60 minutes using our 6 minute candle as our entry. So on every 60-minute flip. So we have to wait for that first 60 minutes. Okay. So here's what happened. Price gapped up, went inside, 2 up, and you can see that traded in a fairly tight range, which is why we're waiting for that first 60 minute to close. We don't like dojis in the first 60, right? There's nothing, no. Market did not have a definitive direction. If you see a doji on a 60-minute flip and it goes inside, guys, this is the best time to go find something else to do, because you're waiting now for that 60-minute flip off the inside bar. Okay, we don't want to be inside 60 trying to trade. This will get you murdered. All right, so here was your 1030 flip, and you can see on the 6 minute how tight it traded in this range. There's not a lot of action here. I still use my CCI, right? So my scripts, ADR, CCI, and then I'm just waiting for price action to give me a direction. So next 60 flip, you have 2 up, inside bar, 2 down. I'm sorry, 2 up, inside bar, 2 up on the 60. Now, is there an opportunity to gauge enter here? I use CCI on the shorter time frame, crossing above 100. You had a small window right here. It went 3-2, right? So I take the top of the high of that outside bar as price is crossing a plus 100, and then the low of this bar would be my this outside bar, I'm sorry, the low of this bar will be my stop loss. Now, if it trade, because this is an outside bar, if it had traded 3-2 and then 2 back down, I would have used the low of this bar as my stop loss. So I'm managing my trade here using CCI to see if it's creating a 2 against me on the 6 minute. And so it goes 2 down right here, but CCI is still above plus 100. So I'm going to hold. It goes 2 up. Then it goes inside. Now you're at the top of the hour, right? This is your 12 o'clock flip right here. I'm using CCI to determine whether or not, you can see here, I don't have the 30 up. I just don't necessarily use it, but I can, because I'm using my CCI to tell me when the trade is over. This goes inside and then it goes 2 down. And as you can see, it's crossed back over, guys. I'm out of this trade. I'm out of this trade. So CCI is going to get me in and CCI is going to get me out. I'm not going to guess at whether or not the 30-minute is getting ready to reverse. So this was first 30, and this is the second 30. So I'm not guessing at whether or not this is reversal here. Okay. All right. So using CCI will help me to quickly get in and out of trades. Now, what happened here? It certainly did reverse, but here's what I want you to pay attention to. You had this 2 up on the 60, then it came back in. Now you're looking at your next 60-minute flip. But 2-hour time frame, it's still trading inside that 2 hours. This is important because what I've seen here, if you were to take this 60 up, right? That's why I said there was a small window here. So there was not much profit, if any at all. And if you're looking at your 2-hour time frame and you're looking at your CCI, maybe you don't even take this, because this now becomes a 1, 2, 2 rev strat. We talk about it all the time. If you guys were to zoom out on your trades, you would be able to see this a lot clearer than if you were on the 15 or the 18, right? It's a lot clearer to see if you were to zoom out what's really happening on the longer time frames. And so this is for those who don't want to trade all day, don't want to jump in and out and scalping trades. If you were to use the 60-minute time frame, or the 90 or the 2-hour, just a longer time frame, and this is what it would look like on a 90. If you were to zoom out and looked at a 60 or 90 and traded off inside bars, your opportunity for risk reward would be greater, and you'd have fewer misses, if you will, and you can hold your positions a little longer. All right. When price trades inside, like you see here on these tight ranges, and I'm gonna flip this back to the 2-hour because you can see it a lot better, there's just nothing to do. And sometimes we try to create a market when there isn't one. And these are the types of trades we want to avoid. We like those big red candles. And so this was a reversal into time frame continuity on the day as soon as it took, here's my yellow line here, as soon as it took this day red. So you see that reversal there, and it was a beautiful trade. So if you had waited, just zoomed out, put on your 2-hour time frame, see that this is just doing absolutely nothing throughout the day and waiting for that 4-hour flip. You had one trade and you would have made a ton of money. I think I saw someone post to Rob that they had a 2,000% on their SPY puts. I'm not sure where that person entered, but again, this was a 1-2-2 rev strat on the 60. All right, you see it went 2 up, gapper inside bar, went 2 up, only to come 2 back down, cross CCI, gives me confirmation, and you had this big move at the 4-hour flip, but you can see it went 2-2 on the 2 up, 2 down on the 2-hour. So it actually triggered before the Qs triggered, right? The Qs stayed inside 60. It went 2 up, 2 down, but it stayed inside 60. So you still could have taken that. Looking at your trade on the 60 in this last 60-minute flip, I am looking at it here, cross back over here, back over 0. So I'm confident that this is now on the short side. And so there would have been an opportunity to get in here or waiting for the top of the hour once it crossed back below -100 here at 106, 112 on the 30-minute flip. But you can see this then goes red on the day. So as soon as it takes the day red, which was, what was the open? 294.72. Yeah. Right here, guys. So as soon as it takes the day red and that lines up with my CCI crossing -100, I'm in that trade. Let's look at Apple. Again, gapper. We're waiting for that first 60 to close on these gappers, guys. First 60 to close on gappers, because we're looking for direction. It goes inside. It goes inside. There's not a trade here. 1230 flip. Looking at my cross here at 1242. This is red at, let's see, CCI goes, let's see, 150.74. I don't know why I don't have it on this chart. Hang on, maybe we just do it. Make it easier for me. All right, as soon as this turns red, 1248, and again, CCI confirms, crossing right here. So as soon as this turns red, I'm looking to short Apple. Very similar. If you zoomed out and had it on your 60-minute time frames, your gappers, you did not see a reversal against you. Had Apple gone 3 on the prior day, 2 up, 2 down, then we would have taken that 2 down here on that 60 flip and used our average daily range as our target. And you can see here, price hit average daily range and continue to trade lower. Okay, so so we're monitoring this. It blows through it in this candle, great. And now if it comes back up through this average daily range, we're exiting. Here, it came down, traded up in this 60 range here. I probably would have exited, but this is the end of the day, 230. There was not enough to trade this market back up, but it did trade up in this range. Knowing me, I probably would have exited. All right, so let's look at NVIDIA. Okay, so NVIDIA traded a little differently. We wait for our 60-minute flip. Then it goes inside. Now we're waiting to see if price is going to reverse off of this average daily range. Because remember, our challenge here is to seek a reversal. But if price continues, this is a good thing, but we're looking for reversals off the top of this average daily range. So how do you gauge that? CCI. Here's your 60-minute flip. It's inside 2 up, inside 2 up at 1130. What's my CCI doing on the shorter time frame, guys? It's trading up. So we know in the short term, this is a continuation to the upside. Right? So you could have gone long here. CCI crossed above your average daily range. This is a 32222 before it came back down. Now I'm looking to determine whether or not this is the top of your hour at 12 o'clock. It put in a doji here, right at the top of the hour. Now I'm looking at CCI to determine whether or not this is going to hold. It does not. I'm exiting this trade. CCI comes back in. I'm out. Now, of course, you are seeing your 1-2 rev strat starting to form. Now, the question is, where are you going to get in? Now, again, I'm looking over here at this 2-hour time frame. You're setting up a beautiful doji here on this 2 hours. So you know you're shorting this at this close. And so that doesn't happen until here. You could have jumped this. That would have been fine. Why? Because my CCI, here's your 2 up, 2 down here on your 60. And I'm just waiting for CCI to cross back over, right? Because I want CCI to be back below average daily range. Because again, we trade reversals off of the ADR. So it's hard to reverse it if it's hovering above this average daily range, because that will happen and it continues on to the upside. So we want that price to cross back below. So the low of the 60 was 165.03. And so that was this little 3 outside bar right here on that 60. Okay, this was the opening 60. So we know price has to trade back below this range, and we're looking to short. It does here in this candle, I think I say 165.63. It does it right here, and look at my CCI. CCI crosses back below 0. I'm sorry, back below -100. As it crosses, takes the 60 down, CCI crosses below -100 on the 6-minute. That gives me some confidence. This is trading lower, and then you have the flip. It goes inside right here at the top of the bottom of the hour, and you have your 2 continuation on your 2-hour time frame. So as long as CCI is below this -100 and price is below my average daily range, I'm feeling pretty confident about the move. If price started trading back above ADR and back above -100 on the 6, I'm no longer confident in that move. Okay, so aside from drawing my broadening formations, I'm just simply using CCI to help us gauge whether or not the trend, the momentum is continuing in our direction. And in this case, we had our move here to the upside off of that inside 60, and then we have our move here to the downside off of a 2-2 rev strat, a 1-2-2 rev strat. Okay, let's look at Microsoft. Microsoft was a tough trade to start. Here we go again, which is why we love for price action to on the gappers to wait for our 60, right? Let the 60 form, guys. Let the 60 form on these gappers, and then look for our entries. So in this scenario, we had a shooter here on the 60, right? So it gapped up, created a shooter, and closed red on the day. So you know this, it's below the level, our line, so it's red on the day. CCI is now trading back below. Keep in mind, it traded up first. It went 2 up first, guys. It went 2 up, which is why you have this outside bar now. It went 2 up, but it didn't hold. Here's your 60 flip. So technically could have taken that, but here's your 60 flip right here. This was not a great entry, right? Because you had an inside bar way up here at this would have been like the 15-minute flip if you were on the 5 or the 15. Then you had 2 down, 2 down, 2 down, 2 down, 2 down, 2 down. You never got another 2 against you. So here in this case, if you take this guy here, right? So this was your low, 2 down. Here, it TTO'd. If you waited to take the low of this 60, it TTO'd right here. So whatever that low is, it would have crossed here in this range, and you got your TTO and back down. That would have been a little tricky if you were just waiting on the 60. But here's how you would gauge your, again, if no broadening formations, here's how you would gauge that if you're going to hold this guy. One, you could have taken it, the 60, once CCI crossed back below and went red on the daily. You had this 2 up, 2 down inside bar. But if you wait for your 60 flip, which is what I would have done, then I would have waited to see. I would have just drawn my broadening formations after, because now you don't have a 2 against you. I would have drawn this broadening formation. So it's very similar to the way I draw it normally. So this was the low of the opening range, and I'm looking for the next lowest candle inside this range. So this was 258.55, 258.54 is too low, so it would go to this one, right? So we want to be inside this range. This one was a point outside the range, okay? So this would have been my broadening formation. So had I waited, taken this low here, the 60 low, this would have been my broadening formation. I would have held this position until it crossed back above this broadening formation. Okay, let me say that again. On these gappers, when you're going to take the 60 reversals on these 2-2, we're going to take the low. So the low was this opening 6 minutes. So the low of the 60. And we're going to draw our broadening formation back and up to the next lowest candle inside this range. Right now, I use a 6 minute candle. Let's look at just to see how that would have, if you are a 5 minute type of person, the low and the next lowest candle in this range would be the same. Yep, so it would have been the same, right? And so we would have entered here, and then we would have held it if it crossed back above this range. If you were on a 15 minute candle, yeah, same thing, guys. So this would have been your entry, right? So this is your 60 flip if you had waited. Now that's what I was saying here. If you were on the 15, you had this 1-2 rev strat that kicked off the 60 reversal. You could have entered here. My preference is to wait for the 60 close, only because a lot of times you'll see one of these 1-2 and it comes right back up on you after that 60 close. You just don't know, guys. You just don't know. You just have to know where to enter your stop loss, because you don't want to take big losses on these moves. So I'm here on the 6 minute. I'm feeling confident because this is trending down, right below my CCI's crossed below 100. I'm going to take the 2 up, 2 down on the 60. I'm going to hold the 60 minutes to where possible, you know, until the next flip, right? Next flip happens here. Price TTOs here, right at the bottom of the hour, continues down, goes inside, crosses back over, right? CCI comes down, crosses back over. I'm out of this trade on this 60 flip, which is right here at the bottom of the hour. Price goes inside again. I'm not trading inside 60 though. All right, so I'm simply waiting for the next entry. So now, again, you're looking at, if you're looking, this 2 hour flip, right, was right at 11:30. So you can see, again, if you zoomed out and you say, well, price has to trade back above the high of the day on this 2 hour flip. Sure, it can do it. CCI is going to help me with that. So now I'm waiting for this inside bar. Now I'm looking at the next 2 hour flip. What is CCI showing me? Not a lot. Not a lot. It goes inside, and then you have this doji forming. So here is, if you were to have taken this trade, CCI cross above plus 100, you may think, yes, I'm going to take this. CCI on the 60 minute is flatlined. But if you say, yes, I'm going to take this trade, right here is CCI crosses above 100 on a 6 minute. On that next candle, it comes right back down. You're out of this trade. We're not guessing. We're not thinking. We're not hoping. We're not praying. This comes up. I'm in. This comes back down. I'm out. Okay? You have to use, you don't have to. I use CCI to help me with this. If I see this move and I'm like, well, it's still in my buy zone, maybe it goes, maybe it doesn't, and I take this trade up and then it goes inside, and then the next candle it goes 2 down, crosses back over, I'm like, And then what am I looking for? 122 rev strap. And then the 2-hour flip happens as soon as this crosses back below your range here on this flip, which is right at 130. It goes 2 up, 2 down. You're taking I would take the low of this 6 minute, right? Because you see your rev strat forming here. Take the low of that guy. And of course, that takes the 62 down, and you have a nice move to the downside. Okay. So instead of trading on the 1518, if it's just too fast, or you just don't have the time to monitor the market that closely, don't look at these moves here inside the 60. Wait for your 2 downs, your 2 ups on the 60. All right, so we're going to look at Tesla, and then we'll wrap up. All right, so this was Tesla. I am, so full disclosure, I am actually holding this. Should have closed it out. I actually got into Tesla on this move here off the 60. It TTO'd me. I should have waited. And this is exactly why I wanted to show you guys the longer time frames. Everything doesn't work exactly the way you like it to. So here was Tesla. Actually got in up here though, but let me show you what happened and why it's so hard to trade Tesla. Same thing, gapper. It went 2 up. Slight move here to on the CCI, but you can see here that barely crossed on this 2 up, guys. CCI went flatline on the 60. That would have been a difficult to trade. So you're holding and you're just waiting to see if there's an opportunity here. Don't like it, it then goes inside. We don't trade inside, but we do trade 2-2 reversals. Now, this is clearly still above 100 here, but I took a chance at it and of course got TTO'd, but I held it. So here was my 60, let me see where that 60 low is. Actually, it was here. Yeah, so here was that 60 low. I actually entered here, so I jumped it like I always do, got TTO'd, got in early off this outside bar. CC started crossing over, so don't follow my direction on this. It got TTO'd, but when I looked at the 2 hour, I was like, but I held it, right? Got triangled out, was down a couple $100, and then finally saw this move here. So if you are on using your 2 hour, my recommendation, especially, and you can see CCI didn't cross over until here on this 4 hour flip, right? So right at 130, then you caught, a nice move to the downside. Here's my problem though, guys. I saw this move, this shooter here. I actually held it. I may lose money on my option here. So I'm a little, I'm not happy. I bought a 720 put here. I bought so I went out of the money on this and I bought the 720 put. And as you can see, it traded down to that level. Should have taken my profit and look at it in pre-market. So not excited about that. But what I'm hoping to see is price is gapping up and will continue to trade down and go 2-2 to the downside on the daily. So we'll see what happens on that. But here's my message. This is trading at the top of its average daily range. It didn't quite hit it like you see here on NVIDIA. Okay, and then come back down. But anytime you see price getting near the top of your ADR, I would pause zoom out, especially in a case like this. Zoom out, look at your broader ranges to see if price is topping out, see what CCI is doing. If you see it starting to trend down, don't try to go to continuation on these gappers, okay? Look for reversals at the top of the ADR and at the bottom of the ADR using your longer time frames for confirmation. All right. We're gonna wrap it there. And let's see, excuse me for a second. So close here with Proverbs 21:5. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. You don't have to trade the open, guys. You don't have to draw broadening formations. If you use your 60, and I'm a big fan of the 6. So using your 60 on the bottom of the hour flip, looking for 2-2 continuation patterns. If it goes inside, then you don't trade. You just don't trade. You wait for that inside 60 to close, and then you look for your signal. And in this case, I should have exited. So I would have, so had I done it the right way, I would have entered here, but I actually entered earlier. So I entered here if I would have waited for my 60 flip off the inside bar. And I would have exited here as soon as this crossed back over. We're just not going to fool around with it because we don't know if price action is going to continue or not, right? As one would what a lot of people say, especially when it comes to the strat. Hindsight is 20/20. It absolutely is, which is why I use CCI. All right. So enter here. I should have exited here, but I liked my odds, so I held it. I would not recommend doing that, especially with Tesla, especially if you have a small account. But if you have a small account, gapper reversals are probably the best way to trade off the 60 using patience, because you won't have a lot of opportunity to enter and exit trades if you have a cash account with not a lot of leverage, okay? And so keep that in mind if you're trading in a small account. All right, I'm going to wrap it up for video, and I appreciate you guys following me. Take good care, everybody.